Hey traders, welcome to this next segment of the Forex trading series. Now we're going to start jumping into the fun stuff, which is technical fundamental analysis. And I'm going to start breaking the videos down into smaller segments so it's more bite-sized and you guys can possibly have more understanding that comes of that. Now, this video in particular is going to be the stadium within which we're playing. All right, so we've covered the sandpit, which is the outer boundaries of the overall industry that we're going to be operating within. You've got the players that are a part of that. We've also gone through mindset, and for many of you, I think you kind of have understood that. But if there are any issues in regards to that, like clear issues, then certainly point that out to me, and we'll elaborate further. And in this video, let's start jumping into looking at the market from the standpoint of being a player, right? Now, a friend of mine, Tina, was having a conversation with her over the weekend, and we were discussing human psyche when it comes to achievement. And she said something interesting that made a lot of sense to me, which was, in order for humanity to achieve ordinary performance, they've got to aim for extraordinary performance. And that made a lot of sense to me. So let me simplify that. Let's say, for instance, you've got a goal that you'd like to reach. But in order for you to very comfortably reach that goal and achieve it, what you've got to do within your own psyche is establish a point that you're aiming for that's beyond that goal. And I think it's that what gives you the encouragement to kind of just shoot for the stars. I should say. It's, for example, if you're aiming to hit the moon, aim for the sun. I know there's greater distance there, but aim for the sun. So something that's beyond what your initial point is. Another example, say for instance with Usain Bolt, prior to him hitting 9.58 seconds per that 100-meter dash. That benchmark that he established was not ordinary performance for human beings, right? What he did was, through his extraordinary performance, he was able to achieve that mark, which has now kind of become ordinary for humanity. Why? Because he's achieved it, right? And for him, in order for him to either hit that or break that, he's got to now, and again, that would be ordinary for him because he's already done it, he's going to now have to apply extraordinary performance to that, right? And that will then get him a point beyond that 9.58 seconds, or possibly just continue hitting that mark. And for other people now, that's an established benchmark, which is, okay, that's an ordinary goal. For them, it now becomes extraordinary performance, which is going to get them to hit that ordinary goal or better it, right? So what they're going to have to do within their training, within their diet, and within their mental state is possibly aim for, say, 9.4, 9.5, or something along those lines. Because if they're going to continually just reach for 9.58, chances are they'll probably hit that, but a time above it, like 9.6 or something. But if they're aiming for 9.5, then chances are they'll get to 9.55 or something along those lines, right? That's just how human psychology works. That's just how our mind works. And until we start understanding something more deeper than this, then this is what we've got to work with right now. These are our tools. Okay. Now, before we jump into the stadium, can I also just kind of point out towards these videos? We've got people that are with the thumbs down now. That's not a problem. You don't like it, you don't like it. But the whole point of these videos are whereby you guys can kind of either learn something from it or utilize this to understand something a little bit better that you might have read somewhere else. And if that's going to help your training game, fantastic. So can I just ask, you guys can click the thumbs up or thumbs down as much as you wish, but can I just ask if there is an issue with material understanding wise? Reach out and I'll see if I can help you out, right? Because the whole overall goal is I'm not promoting anything here, so it kind of doesn't really matter if the product's good or it sucks. And I've got very little feedback beyond your comments, so I really don't know what I need to tweak in order to kind of deliver the message in a way that will benefit you. This is about a benefit to yourselves and whatever you would like to achieve from trading. But if you can kind of give me that feedback, then I would ensure that I kind of do better at my delivery. Okay, so just that. The other thing can I ask is, when you're looking at some of these videos and I'm looking at the number of views, there's a lot of you that are kind of, let's just say you pay more attention to strategies per se and not so much, the mindset might not be important, so I'm not going to delve into that. And there's a lot of informational videos on the channel, so a lot of people saying, yeah, it's probably I didn't really bother about that information. The aim really is to equip yourself with as much information knowledge-wise, not just, just crap out there, but knowledge-wise, better understanding of different segments of the market. And once you have that, I guarantee you that the trading game becomes easier. And just a quick message to binary options traders as well, that a lot of you are looking at Forex in the title and you're avoiding watching some of these videos because you think that's not going to apply to you. For me personally, I sucked at binary until I realized that I was making a mistake looking at binary being different from Forex. Remember, Forex is the overall market. Binary is just something in-house within your binary options broker's platform. None of those are live in the live market. So when you're looking at it from that standpoint, if you've got an understanding of how the Forex market works, binary becomes much, much simpler, easier. And later on down the track also, you can diversify and do binary and do Forex and do Nadex and do equities and stuff down the track as well if you'd like. Okay? Now, let's jump onto our charts. The title of this video is The Stadium. And basically what I'd like for you guys to start understanding now is you've got the sandpit, you've got the major players, but where you actually play your games within the stadium, right? So your cricket field, your soccer field, your Europeans call it football, you guys are saying it wrong. Your gridiron pitch, or whatever you guys in America call that. A rugby field. For chess players, this is your chess board. Monopoly players, that's your Monopoly board, right? So you get the picture. This is where we're doing our playing. All of this are our tools that we're going to utilize to discover, say, more information in between the lines. That's all we're trying to achieve. Because when you're looking at your charts, right, if we get rid of this aqua line and this white line, basically what we're seeing is these boxes here are breaking up the different sessions. So this box is showing us the Asian session, this is showing us the London session, and this is showing us the New York session, right? Now, for those of you that are already familiar with that, I apologize. I do realize that we've got a complete, like a diverse group of traders that are from complete beginners to some of you guys are quite advanced and experienced. So I'm going to have to touch upon some of the basics as well. So people, I don't want to leave anyone confused, okay? So what we're seeing is the breakdown of the sessions, and forget the lines, and we're looking at candlesticks that are showing us what the market has done in that 15 minutes, right? So red sticks says to us that from the beginning of that time when the market opened till the end, the value of the Euro-USD currency pair came down, right? That's what it's showing us. The green ones are showing us that the value of the Euro-USD currency pair went up, right? Now, in previous videos, I've asked you guys to look at your currency pairs as your opponents or games that you choose to play, right? I'd like you to kind of shift that right now. And the shift that we're about to make is that millimeter shift in focus that's going to transform you from being one of the traders that could potentially end up being a victim, the 99% of traders that lose money within this industry, to that 1 or 2% of ordinary traders who have achieved extraordinary results that are constantly and consistently making money from the markets. Right? This is how we're going to transform. If you continue doing what others are doing, if you continue chasing forums and groups and signal providers and a new indicator every single week, what you're going to end up being is within the 98% that are going to lose money. Let's do something different, okay? Now, what I want you to do is to look at your counterparty to your trade as being your opponents. By counterparty, I mean if you're trading with, say, ECN brokers, proper ECN brokers, then what you'll have is the counterparty being the liquidity providers, literally the people that take on the other end of your trading contract. If you've got a mix of ECN market maker type broker, then chances are they're going to take on the other part of the contract, so you're playing against them, right? That's how I want you to start looking at it. From a more fundamental viewpoint, you're looking at your currency pairs as two economies that are kind of weighing up against each other. So Euro USD, the whole entire European Union, weighing up against the United States. And that's how you're looking at it. And you're going to look at each country as an overall economy, right? And this is where fundamentals are important. So far, we've been talking about the technicals, which is great on its own. But when you want to become that ordinary trader that achieves extraordinary performance, then what you need to start doing is combining fundamentals and technicals. And what I mean by fundamentals are whereby you're looking at the overall health of one economy, and you're looking at the overall health of another economy, and you're looking at all the major players within that as well, plus little segments of that economy, or let's say standards or benchmarks of that economy that you can compare with each other, which will give you an understanding of why one currency pair would be stronger than the other at any given time, right? So, for example, with the US economy now strengthening, right, chances are the interest rates will continue to go up if it continues to strengthen. What we're going to start weighing up is what's happening with economies of the rest of the world. So in order to start understanding this relationship between AUD USD, for example, we're going to start looking at, well, the United States economy is strengthening. What's happening with the Australian economy? We've just recently, we were lucky enough that I think we had a 1% growth with our GDP, and so we bypassed the recession. What do you think would have happened if our growth was negative for 2 consecutive quarters, which would have meant we would have gone into recession, right? How do you think the market would have reacted to that piece of news? What would have happened to the Australian dollar in comparison to the United States dollar? Obviously, going into recession would mean our economy is weakening, right? So what would have happened? The Australian dollar would have started falling. The US dollar would have started getting stronger in comparison to that. If you start looking at currency pairs that way, then trading becomes easier as well, okay? Because you now know, well, this is what's going on with this economy, and so that's what's going on with that economy. If I can compare the two, chances are, if I'm expecting the market just go crazy up high, it wouldn't, because we know this economy is weakening, it's contracting, right? In the same way, and let's use Brexit as an example. Why do you think the market just absolutely tanked when Brexit came out as, the Leave vote had won, or was winning? It's simply because the overall market looked at what would happen or what was happening in England, in the UK, and it was saying, okay, if the UK pulls out, we're thinking overall it's going to destabilize the British economy and also the European economy, right? Why? Because there's just so much work that needs to happen now, where the UK, in order to have trade agreements with all the countries within the European Union, they're going to have to go out and negotiate individual trade agreements now. Whereas prior to that, there was none of that. And plus, with businesses and everything being destabilized, the market saw that and said, okay, this is going to have a negative impact on the UK economy. That's what their belief was at that point. And so what happened? The market started to tank. Now, if we were applying our strategies at that point in time and saying, okay, but the technicals are saying this, well, you guys would have wiped out your accounts, correct? And this is why we pay attention to both the fundamentals, and we also pay attention to the technicals. Now, some of you are possibly asking the question in your mind right now, well, what are the fundamental bits of information that we really need to pay attention to? Good question. We're going to touch upon that in the next video, okay? There's about 5 or 6 different pieces, and that's kind of connected to bits of information that affect economies, and I'm just going to go through that. I'm going to explain it to you. I'm going to show you also on investing.com or Forex Factory when they are released and what to look for. So yes, you start paying attention to that. And then we're going to go in deeper into our technicals. And by saying that, we're going to have a in-depth look at our Elliott waves and the various rules attached to that. I'm going to explain much deeper into what the different types of waves, why the market actually does what it does in this regard. We're going to go much deeper into Fibonacci as well. I'm going to explain to you what the sequence is, what the golden ratio is, why we kind of give it so much importance, where it came from, that sort of stuff. We're also I'm going to show you how we utilize both the retracement and the expansion tools. And especially with the retracement one, like which points we retrace to and why they are the important ratios, or in particular the golden ratio. And so once you kind of have a more in-depth understanding of those tools, you'd be able to, when you're applying it, be able to see so much more information on your screen, which you now know also is stuff that institutional traders or institutions themselves are looking at, and you know they've got the benefit of seeing so much, whereas we're just seeing these footprints. But with these tools, we're going to utilize them to be able to kind of read between the lines and see exactly what information that they're looking at. We probably won't have the data itself, but we'll know what's going on. We'll know how to predict where the market's going to go to, right? We're also I'm going to do a video on explaining what these EMAs are. Okay, because a lot of you use or have been using moving averages for a while, but not too many people kind of understand what they are and why they are, right? We're going to cover and break down 3 support and resistance lines, zones, that sort of stuff. The first one that you're probably all familiar with, which is the horizontal support and resistance lines that we draw in. So it'll just be these sorts of stuff, where that's your resistance, and if we drew that one in there, we'll say that's our support, right? But these others that not too many people are familiar with, there's the dynamic support and resistance lines. A lot of you guys probably have worked this out. These ones here, these EMAs, see where the price bounces off? The market is presently utilizing these EMAs as support areas, right? So it will come back and will bounce off there, right? Now in this case, see how here it breaks down and there's a retest. This goes back up close to it, doesn't hit it, but that is now utilizing this area here, just below the EMA 50, as a resistance zone, right? What we're expecting is that at some point price will come back up and hit our 50 before it comes back down again, right? So that is for us now a new resistance dynamic trend line, right? And the other one is your effect like a set trend line. Excuse me. So we've got the horizontal ones, we've got the moving averages, and then we've got what we would consider to be our set ones, right? So we'll grab our diagonal tool here, and then we'll just hold, and we'll try and get to at least 2 points that meet, and we'll just continue going up to where price is right now. Remember what I said earlier, where we're looking at where price is at this very moment, and then we're also looking at where price has actually been the footprint that the markets have created, because what this is going to show us eventually, or this is going to show us eventually, is that price will come back to these points and start behaving a certain way. Now, say for instance, we're just through our analysis saying, okay, market's coming down, and we've got, say, no idea of where the market's headed to, and we've drawn this we've drawn this in. So what we're going to do is we're going to say, okay, it's 9 p.m. in Sydney right now, and New York for me opens at midnight. So what we'll expect is for the market to possibly consolidate, do a few things, and eventually get to this line here, the green line that I've just drawn in. So we'll get to this line here. It may hit this line and bounce off, or it may break this line, come back and do a retest, and then come back down again, right? So we've got possibilities there, and we're going to do a specific video that's just going to touch upon these points. And the whole point of all of this combined is to establish confluence points, remember, or focal points. Focal points is that term that I coined that basically just says to us, well, the market is most likely going to come to this area and do something that we recognize, and that's going to become our entry, or it's going to confirm for us a prediction that we've made of the market heading in a particular direction. Okay, there's going to be another video that I'm going to do, and all of these videos will possibly be released within the next 24 hours because it's 14 has come. I'm feeling much better, so I'll jump straight into them. Is previous structure analysis, right? That's extremely important. Remember where I was talking about the footprint, that the market's already giving us this footprint. So what we're doing is we're going to utilize previous structure to say, okay, is this market in line with whatever our prediction is? So quick example, we're on the Euro-USD currency pair, and where, say, for instance, throughout the Asian session, we've just watched the market do its thing, come back, do a bounce off the 50, early London session, market goes back up and then just consolidates, right? We probably check to see if there's a news release or something happening. Chances are probably open of New York, and chances are there always is. And what we're going to do, especially on a Friday, there will be a news release. What we're going to do is we're going to start timing our trades, and we'll say, okay, if there's a news release happening at some point around there, we know we're on the Euro-USD currency pair. We know that this news possibly is to do with the US dollar, and we know that if the news is good, then the Euro-US currency pair will fall, right? Because remember, this, when we're looking at the economies here, this is the base currency. So if Euro does good, market goes up here. If Euro does bad, market comes down. US dollar does good, Euro USD will come down because it's showing us that the US dollar is stronger than the Euro, right? So if it's good news for the United States, then this is going to start tanking. But if it's bad news for the United States, we know that's going to strengthen the Euro. And so the Euro-USD currency pair will start going up, okay? Because this is the rate that we pay for the Euro at this stage. So we'll say, okay, Euro is getting stronger, market's going to go up. So what we're expecting now is, one, this has been going up all day. Two, that chances are market's going to come back and do a bounce if we get bad news for the US, right? And then here's the other thing. We're looking across our screen and we're saying, are there any established structures that the market has kind of already given us? And because why we're looking for that is, if there's a structure there, that's a stronger focal point that the market's creating. Example, we look back and we say, okay, with London so far, they're not doing much, so we'll look back to see what the Asian session has done. And we say, okay, this is where the Asian session has created its high. So what I can do is just drop in a line, right? And say, okay, I'm expecting market to come at least back to this point. The other thing is that I have my EMA 50 line here as well. That's going to be dynamic. We can get rid of this green line because we wouldn't have had a point here. What you could have done is had a trend line from this point to possibly this point here, and we'll just extend it out. Okay, so that point there, and that creates an additional focal point for us because we're saying, okay, we've got the high of the Asian session, we've got our EMA 50, we've got this trend line here as well, and then we've also got a high to do with the previous New York session. So on Thursday, the New York session created a high, right? So what we're now doing is we're going to say, okay, we've got 3 points here at the open. Market opens and then this goes crazy up. It breaks this point and this point. What that means now is that our prediction was correct, right? So what we can do is look for an entry off the next candle. Now, here's a couple of things that you kind of need to be aware of. We've discussed this in previous videos, but let's kind of revisit that here, is when the market does one of these, like massive moves up, right? What we call them is impulse waves, or what I would say here would be like these big moves here would be impulse waves. The market always moves in waves, right? So you know that you probably will get, you know, certain moves where it's 1, 2, 3, 4 candles just going straight up. Let me show off with this new tool that I've got here. Okay, so you might get candles that just kind of do this. Okay, and you know it's the market's known to kind of do that, but chances are what's going to happen is that you will always get bursts, and then the market's going to come back down again, right? And then do bursts again, and then come back down again. These are Elliott waves that we're we're talking about. And we're going to jump into that in a separate video to do with Elliott waves, right? But what I've, just for the purposes of this present session, what we're looking at is once the market kind of moves up like this, and chances are you could probably jump in off your trade on the next one, especially when the market move is that significant. What you're going to expect is there's going to always be some corrective candles that come into play, right? So don't freak out, say for instance, if you got in here where some of the next candles kind of do this, okay? Or some of the next candles come back down and probably do another wick to the 50 or so, or another wick to this trend line that we've got before the market goes back up again. Why? Because we're expecting that market's going to do this, and then it's going to come back down, and then it's going to do this, and it's going to come back down, and it's going to do this, and most likely come back down, right? So look out for that. If you're getting big candles like this, maybe wait it out. Maybe stop for the market to do this before it goes back up again, and then it's okay. Now once it's kind of broken past this point, then I will go into a trade. You'll also analyze and you say, okay, is this too late in the New York session for my liking? It's completely up to you. That's part of your decision-making process. But these are the sorts of things that we need to start applying, because remember, when you're reading between the lines, then you start seeing a lot more information that you can then utilize to decipher exactly where your entries and exits are going to be. Going back to point of what I was trying to make 20 minutes ago, it's basically you look at where the market is right now. You're looking at where it's been previously for a long period of time, and feel free to laugh at my drawing. So I'm an artist now, a struggling artist. Okay, so we've looked at where the market's been, and now we're trying to utilize all of this information to predict as to where the market's going, right? So what I'm going to do tomorrow, when I start releasing some of the videos I've just talked about, I will explain to you why that market has moved from here to here, like why you could have taken an entry here and exited with 20 pips. So if we do the calculations here, and for the new traders, we're utilizing the crosshair. So basically what we're just going to do is we're going to point the crosshair wherever we want to start adding from, hold it down and draw out to wherever you'd like to go to, and say for instance we're just searching for 20 pips. See, that's done within 15, 30, 45 minutes. At the end of this candle, you would have had 22 pips also, right? So that's basically how you discover how much the market's moved in the simplest way. But that's where we would have taken our entry, and why would we have taken our entry there? It's simply to do with Elliott waves combined with Fibonacci, right? So I will put that into the video and I'll explain that to you. What we're expecting, chances are, let's have a look to see where this move actually has come from quickly. So if we looked at this move, it's now bouncing off our 23. Okay, let me get rid of that and zoom out and say, where was the initial move, which was this here. Okay, that's the 100% mark. Market came back down, and all we're doing is utilizing Fibonacci to look at lowest to highest, and we're trying to discover if this is the 100% move that we're just picking up on. We're trying to discover to what percentage this market is retraced back to, right, of this move here. So this is basically just a tool we're utilizing to figure out a percentage retracement of this initial move here, right? So in this case, this has come back to hit our 78.6 line. And then I'm just going to utilize the expansion tool, and we're going to put that 100%. So remember previously from 0 to 100, we're going to put our 100% tool here, and basically we're expecting, utilizing the golden ratios for Fibonacci, price is going to at least get to either 127 or 1618. And look at where the market's bouncing from. That is something we can reasonably predict just by utilizing these tools, because we're reading in between the lines, remember? So we'll jump into that. Now, when we're jumping into Elliott waves, and I'll give you more of an in-depth understanding as to why the market is kind of moving in waves and how we're reading that, we're also going to tap into, and I've just quickly forgot, okay, yeah, just remembered. We're also going to tap into where you would apply your chart patterns within that whole sequence. So where would you look for your double bottoms? Where would you look for your double tops? A more in-depth understanding of Elliott waves will actually tell us that. Okay, so the next few videos will actually go in depth into that. Coming back into just point before I close off this video, basically it's where I want you to start looking at this overall as your stadium within which you're working with. I want you to start paying attention to these currency pairs and start understanding them from the point of like multiple, well, two economies that are kind of coming in together and weighing up against each other, right? Because those are fundamentals that are important. I want you to start now in your mind, start applying market movements where you're combining both technical and fundamental. I want you to become familiar, become more in-depth familiar with your stadium itself. Have a look around, because you know when sporting teams, if they're playing at home, they're familiar with the energy that's present there. They're familiar with their fans. They're familiar with the pitch. And so that gives them some strength. I want you guys to now play around with your platforms, become familiar with them. Become familiar with drawing lines in, look for where your horizontal lines are. Play around with your diagonal lines. For example, with your diagonals, some of you might not be familiar with them. When you draw in a diagonal line, I want you to go into trend line properties for that. Now, for many of you, what you're going to find is that they just kind of continue going to whatever extent. If you notice where I've got my lines limited, what I want you to do is go into the properties of it, click on parameters, and you will have this ray button, right? Ray button kind of just means it will just keep going indefinitely. So uncheck that and click OK, and what will happen is that the next time you use it, you'll just have a point to which you can actually draw to, right? So it limits that. So I want you to start playing around with that, because again, this is something you need to become familiar with, right? Now the next videos that are going to be released, EMAs, and I'm going to define them more, get a better understanding of them. We're going to be talking about Fibonacci tools, expansion and retracement. We're going to do more in depth of Elliott waves, which is going to consist of the multiple types of waves. So we've got the impulse, we've got the corrective waves. We'll show you some examples, live examples of what they are, how to look for them, rules associated with that, and how you actually apply Fibonacci to Elliott waves in order to let you know where the market's at right now and how to predict where the market's going to go to. And someone asked in regards to pivots and where the market's going to retest or reset. Those are going to tie in with again with Elliott waves and where the market's going to establish pivots. And basically, we're just going to utilize our Fibonacci retracement tool to figure out where the markets are most likely to establish pivots. And pivots just are, these points here, these points here. This is all we're looking at. It's where the market kind of comes into price rejection and then continues moving in, like it's just established another wave, right? So how would you predict them? How would you utilize them to analyze for more information? We're going to study the three types of trend lines, again, horizontal, dynamic, and the actual trend line. So something along these lines, the diagonal trend lines. That stuff, we're going to look at previous structure analysis as well. And all of this combined will then go into macro, micro analysis and all of that. Right now, I think projection-wise, we're looking at about 10 videos or so, or maybe a little bit more. But we're getting there. Okay, so guys, my struggle is at this point trying to simplify this as much as I can. I realize so many of you are kind of completely new to this, but I've decided to go deeper into the tools so we can fast track 14 years of all of this stuff, and so you guys should be able to nail it in about 6 weeks. Before I turn this video off, congratulations to so many of you that have been struggling in the past. Shout out to Shitesh as well, mate. Your questions whatever you want to call them, they're still great, but I want to congratulate you, mate, on being able to hit your 20 trades and 20 pips for each trade. Fantastic. And there are so many of you out there that are doing exactly the same thing. So congratulations. And I'm hoping that confidence that you've gained will just continue happening. So well done, and let's secure that knowledge and consistency for you guys with the videos that are about to come. Okay, all the best.